Thanks everyone for having me here. I'm excited. So a little just background on why I'm excited about privacy coins. So I was an early Coinbase employee, and my first role there was regulatory compliance investigator. And so I was actually tracing Bitcoin for my job, and I was working closely with law enforcement and catching cyber criminals. So through that work, I actually saw just how transparent Bitcoin is, and then I got really interested in privacy coins, and I'll get into that here. So the current state of Bitcoin is that it's not anonymous, and you'd be surprised the amount of people that think it's anonymous. Even I went to WikiLeaks donation page, and they actually said Bitcoin is anonymous. So I think there's just a lot of misconceptions. So it's actually pseudonymous, which means that you don't actually use the real identity. So if someone knows your Bitcoin address, you can basically see identifying information about what they're doing. So you can see their balance, you can see the transactions, incoming and outgoing transactions. So if you just go to blockchain.info, you can see all of this information. So the second that that's revealed to the public, that it's no longer anonymous. And so there's a lot of different ways you can actually trace Bitcoin. I'm not getting to all the different ways, but so first of all, there's exchange KYC, so these centralized exchanges, and some of the decentralized exchanges, they collect this additional information about you. That's for regulatory purposes. Another purpose is actually for fraud reasons, if there are fiat rails. So I think a lot of people don't think as much about that. So if you're actually an exchange that offers fiat rails, you basically offer these payment methods that you can actually charge back. And then, so if someone pays for buying Bitcoin, they can charge back that payment, but they can receive that Bitcoin and actually move it off of the exchange. And so you can actually lose a lot of money that way. So when Coinbase first launched, that was actually a pretty big problem that they had along with all the other exchanges. And so they really had to collect more information about accounts sometimes in order to basically get around the fraud. So it's both compliance and fraud that's for KYC. There's also this concept of vanity addresses. It's not as common anymore, but it used to be pretty common where basically people try to brute force the first string of letters and numbers of a Bitcoin address in order to spell like their name or something. That actually means they're not very anonymous in that way. So Satoshi Dice actually at a point, every single Bitcoin address they would have started with one dice. So immediately on the blockchain, you can just see like who's sending to and from Satoshi Dice, and it was like pretty easy. There's also court documents. So there's official court records of people actually saying this is my Bitcoin address. So there's a lot of cases like Mt. Gox, where you can see the Bitcoin addresses. There's also Quadriga right now, where people are like actively investigating Quadriga and doing their own blockchain analytics, and that's because there's some public addresses out there. There's also just generally publicly posting your Bitcoin address. So people saying, hey, like donate to me. I'm writing this post and I'd love to receive funds in Bitcoin. Now we know that that's your Bitcoin address. So just be careful about kind of what information you reveal and don't use the same addresses. Lastly, there's also merchant payments. So if you go through a checkout process and you're buying something with Bitcoin, the merchant will say like, here, pay to this address. And you now know that that address belongs to that merchant. And you can keep doing this over and over and generating a ton of different addresses. And over time, you just have this list of addresses that you can start linking together and create kind of like a transaction graph of what's happening. So a lot of work being done there. This has become professionalized. So in the early days, this was very manual, the work I was doing on this, but it's actually Chainalysis, Elliptic are actually doing this, working with regulators and law enforcement and exchanges to provide this data. It is part of the expectations that they do this for KYC AML concerns. So I'm fully supportive of this, but at the same time, you have to realize that this information is publicly accessible to everyone out there. So bad actors have access to the same information. And so they can use this for illicit purposes and target specific individuals or groups of people. So privacy is really important to me. I believe it's a fundamental human right. Think about it, our existing financial system actually allows for privacy. So like if I have my bank account statements, I'm not broadcasting this for the whole world to see in a pseudonymous manner. It's private for me, and I only selectively reveal that to people when I go through like an audit or I go through some tax process. And so individuals want this personal privacy. It does not mean that you're using it for illicit purposes, you're doing anything bad. You just don't necessarily want people to see your spending habits, and you don't necessarily want everyone to know what your salary is. So there's a lot of reasons why people deserve this privacy. privacy. And businesses also need privacy as well. So for them, they don't necessarily want their competitors to see all of that information. So they don't want people to see their revenue streams. They don't want people to see what vendors they're paying, what salaries they're paying to all their employees. So this information is really important as well to keep private. And lastly, money just needs to be fungible. So you can't have a situation where some Bitcoin isn't accepted on these exchanges because it has a tainted history of being with darknet markets or something. It'd be like going to a store and paying for coffee with your dollar bills and them saying, oh, sorry, 3 hops back, this was actually associated with a cocaine transaction, so we can't actually take this money. So money needs to be fungible and needs to be worth the same and accepted freely. So I love this quote. It's by Eric Hughes in a Cypherpunks manifesto. This was written in 1993, so it's pretty insane. But I recommend everyone to read this. It says, privacy is necessary for an open society in the electronic age. Privacy is not secrecy. A private matter is something one doesn't want the whole world to know, but a secret matter is something one doesn't want anyone to know. Privacy is the power to selectively reveal oneself to the world. So I think that's a really powerful statement, and I think something that a lot of people get wrong when they think of privacy. So I don't have time to get into all the different privacy coins. There's quite a lot out there. I'm going to talk about the top 2 just by market cap right now. Also, this is not investment advice, and Scalar Capital invests in privacy coins, so we hold some of these positions. So Monero, the most important part about Monero, I think, is that it has mandatory default privacy. So every single transaction on the network is actually private. And the way they do this is through a lot of different techniques. The first is ring signatures. So basically, every time you have an input, you start mixing it with some other decoy inputs on the network. So you have plausible deniability that that transaction is actually tied directly to you. And so right now, the minimum ring size, the minimum total amount of inputs into this is 11 for the transaction. And then that means that you have 10 decoy inputs. And in the early days of Monero, they actually didn't have these requirements. And they actually it was pretty easy to trace, because if you didn't have many other mix-ins, people can pretty much tell what's happening. So there were definitely some flaws in the early days of Monero, and over time they've been really working on improving this. And they also use stealth addresses, so single-use addresses that basically means that they can't keep tying your identity back to your address. Ring CT, which is basically just encrypting the transaction amounts. And so when you go on the blockchain, you really can't see any details about what's happening. One downside about Monero is it really just doesn't scale too well. So because there's such little information that's actually being revealed, you have to make sure that you're not doing a double spend, which means that the same money is being spent more than once. And so you actually have to store some additional data that's called a key image for every single input that you have. And so that just always gets stored, and so it's kind of a lot of bloat on the blockchain. But Monero team has done a lot of work in actually trying to improve the scaling of it. So recently, in their last hard fork, they added bulletproofs, and so that reduced transaction size and fees by 80%. And so there's a lot more work being done there. The Monero team, I think, knows kind of the issues that they have. They have this thing called Skepticism Sundays, where they talk about like these are actually like some of the things that we need to work on. So continuing improving. I think this is cool. So Bitcoin and Ethereum have this idea of a rich list. So basically, you can just, because every single address is public and you can see the balances, you have a ranking of all the highest balanced addresses in the system. And so if you just go to the rich list, you can see that. But if you try to go to a Monero Block Explorer's rich list, it actually says, come on, man, really? I thought you knew Monero is fundamentally private. Totally, it is. So I thought that was pretty cool. That's what you want to see out of a privacy coin. So Zcash is another popular privacy coin out there. They use completely different techniques. It's called ZK snarks. So this is so these are zero knowledge proofs, which means that you can prove something happened without providing any information about it, and you're really providing zero knowledge about it. And so the downside to this is with snarks is that you actually need a trusted setup when you're setting up the initial parameters. Zcash has done a lot of work to mitigate the risk of this happening, where basically everyone's colluding in setting up their parameters. So there's a great Radiolab podcast where it's called The Ceremony, where they talk about kind of all the work that they did there. You just need one person to not collude with everyone else to make sure that it was done properly. And so, the more people you have involved, the less likely something's going to go wrong. Zcash also, they had this kind of like open call for other community members to participate in one of the trusted setups, and 2 people from my team participated, so we just wanted to like double verify that none of us are colluding. So I'm not too concerned about the trusted setup part at this point. The part I do think that needs a lot of work is the shielded versus unshielded transactions. So right now, 94% of transactions on Zcash are actually completely transparent. The number in reality, if you actually trace Zcash, is a lot higher, just because you have so much that is public and so few that are actually private, that you can do some more transaction analysis. At the same time, you want to have this scenario where if you decide to do a private transaction, you're not painting this like target on your back. You don't want it to be like, oh, I'm one of the like 6% that's actually doing a private transaction. People are going to be like looking at you like, what are you actually trying to do here? And so Zcash definitely knows that this is something you need to work on. So they've been doing a lot of work to really try to improve this. Part of the reason in the past is ZK snarks actually were very time intensive to generate and required a lot of memory, computer memory. So they actually been doing a lot of work on improving this. So the recent sapling upgrade improved the proof generation time from 37 seconds to 2.3 seconds, which means that you can start maybe using this for mobile, which is really impressive. And over time, you're going to have more and more private transactions. So that's something I'm really looking forward to seeing. Another part that I think is really unique about Zcash compared to like a Bitcoin or Monero is the founder's reward. So basically, for the first 4 years of Zcash's existence, the mining rewards, takes 20% of the mining rewards and gives it to the founding team and the investors and people that kind of brought Zcash to existence. I actually really like this as a concept because I think it's important to have a funding mechanism to continue to pay the developers and to continue to incentivize people to work on this. We've already seen cases where you have developers that are completely being underpaid for their work on developing a protocol. Grin is running into that, where estimated $100 million of money was poured into the space, and then the developers working on this were not meeting their funding goals, and so they actually had to have a call for more donations. So I really like this as a concept. Whether or not the 20% in the first 4 years is the right amount, that's unclear, but I like it as a concept. So there's a lot of other different types of methods. So this is a lightning talk, so I can't get into all of them. But in the early days, masternodes were the really popular way of kind of reaching privacy. So this is just nodes with special privileges that they basically were able to join transactions together and mix things around. So they were the ones that were adding this additional privacy. So Dash uses this method. The problem is that masternodes actually themselves have access to this sensitive information. So it's been thought that bad actors and law enforcement might actually be running masternodes, and this is just really a honeypot. And there's also, you can do privacy on the layer 2. So payment channels are a really great way of achieving privacy because you basically don't have every transaction settling on the blockchain. So it's like a bar tab where you basically, you and your friend can just make sure that you are paying each other back and forth, but you don't need to actually settle until you want to. So Lightning is a great example of this. Bolt Labs is doing some great work on privacy there as well. But the participants that are directly involved are aware of what's happening, but there's also some work being done there to improve that as well. Grin's a really big topic these days. Basically, what Grin does is it kind of takes a lot of the architecture of what Bitcoin is and adds some, so it removes scripting, so basically you don't have the programmability, and then it adds confidential transactions, which basically hides transaction amounts, so this information is kept private, and then it basically does something where it consolidates the transactions within a block to just a single transaction. So it kind of just collapses a lot of information and removes intermediary information that you don't need. So that achieves both scaling and additional privacy. They're doing a lot of work there. I really can't justify covering Mimblewimble in this chat, but my co-founder wrote a great post behind Mimblewimble that you can dig into further. So Mimblewimble is the actual technology itself, and then Grin and Beam are the separate implementations of it. Grin has more of the grassroots effort, which I've been really excited to see. This is where you've seen kind of this huge momentum around Grin and people supporting the ecosystem. And then Beam is more of the traditional model where they're trying to have investors and kind of stuff. So then there's also the hardware approach. So there's this approach, it's called SGX Secure Enclave. So it basically means that you have this like hardware that allows you to do something called remote attestation. Remote attestation means that you can basically prove that the software within this hardware is being run correctly. You can verify that it's being run correctly, but you can't actually see what's happening within the software itself. So you're kind of blind to the information. But the problem with this is that some of this relies on companies like Intel that actually create this hardware. So you're kind of going back to like adding trust back into the system with like Intel. But there's also work being done there with some open source research into trusted execution environments. One of the projects is called Keystone. So that's another aspect. And there's also ZK Starks, which I'm really excited by. Starkware is the team that is the research team behind ZK Starks. It's basically like ZK Snarks, but it doesn't have that trusted setup. The downside is that they do have larger proof sizes, but then in some cases, the proof generation time is even faster. So there's always trade-offs to be made. I think that's like my main point of this, is that privacy is never like this like thing you just all of a sudden achieve and then that's it. It's always you're making some sort of trade-off with scaling or who you're trusting or the amount of time it takes. So there's tons of different methods. Bitcoin itself is definitely working towards having more privacy. But for me, because of the trade-offs that you have to make, you can't always make the trade-off just for privacy when you have a coin like Bitcoin, because they might be more concerned about scaling or getting mainstream adoption, whereas coins that are dedicated to privacy are able to really focus on that and make the trade-offs that they need. Lastly, I do think it's really important to be compliant. I worked compliance at a centralized exchange. So the way that you can be compliant with these privacy coins is that you can use something called a view key, which a lot of these have, where you can basically share this view key with someone, and allows them to view the transacting information, but they can't spend the funds. And so you can share this view key with like an auditor or like someone who's doing your tax work, and then they can see this information, but you can otherwise have everything be private. And this is called selective transparency. And so the way that I view this working when you have an AML KYC process is you basically provide this view key along with additional documents to basically make sure that you're providing the necessary information. This is already happening on centralized exchanges. You have to sometimes provide additional documentation. And when I first started Scalar, people were always saying, actually, there will never be a privacy coin on regulated exchanges. I really dismissed that constantly, and we saw Zcash is on regulated exchanges like Gemini and Coinbase. I think over time there's going to be more of an understanding of why privacy is important, and it's not just illicit activity. We're seeing increased awareness of this with what's happening with like Facebook, GDPR. There's more privacy laws that are being enacted. So I think that this is just like a trend that is going to keep happening as we go into like an increasingly digital world. We're going to have to make sure that we have more protections in place with privacy. So just some additional resources. Everyone please read A Cypherpunk's Manifesto. And then Coin Center has been doing a really big push on privacy and educating people about what's happening there. I think that conversation is really important with regulators. And then my co-founder, Jordan, wrote a great post about privacy on the blockchain. So I can answer like a couple questions. Yeah.
So I think privacy is probably most important when we're actually transacting a lot. Mm-hmm. So like something like Bitcoin, if it's digital gold, you can just keep it, perhaps it doesn't matter so much. And when you transact, you care a lot about like stability of value, right?
Yeah.
Do you see any interesting projects that are pursuing like a stable coin that has privacy features?
Oh yeah, so Aztec is doing that. So the goal is that you can actually have like private DAI. There's also Zephyr paper recently came out. So there are definitely like people working on that. My concern with that though is that like if you're building it on another platform that wasn't already optimized for privacy, it's not necessarily like you run into the same issues where there's trade-offs being made, but yeah, I totally agree. But as for the stored value case, like I still care about privacy because like if by some means like I did reveal my address, like the last thing I want is to people to know my balance, and I think that's like that's not ideal.
Yeah, that makes sense.
Yeah.
You mentioned that you thought that privacy wasn't incompatible with the current kind of regulatory system.
It wasn't compatible?
It is compatible.
Oh, it is compatible.
Right,
yeah.
Sorry, I misphrased that.
Oh, yeah, no, it's absolutely compatible.
Right,
yes,
with
yeah.
Zcash being on exchange, et cetera. But right now, we also are faced with a situation where, yes, banks do give you privacy from other people, from other entities, but Obviously, the bigger question is that we have this kind of NSA access to all of our data. So do you think longer term we will have incompatibility there?
I mean, it's hard to say, and for me, that's also like a U.S.-centric kind of viewpoint, because like I do think there are a lot of other countries that benefit from privacy. But yeah, in the U.S., we have this like unique case of having to deal with the NSA and their power. But I mean, I do think it still can be compatible. I just think that for me, the importance is that you don't have everyone else that can see that information. The NSA, like, I mean, that's a long discussion, but I just don't want, like, if I'm paying like someone with Bitcoin, that they can all of a sudden just see my incoming transactions and outgoing transactions. So protecting yourself from who, it really matters.
Have you heard of any work on private smart contracts?
Yep. So we invested in a couple companies doing that. So Keep Network has been doing some work with private smart contracts on Ethereum. And then there's also Oasis Labs, which is doing a completely new smart contracts platform. They were speaking here earlier today, and they're working through the open source trusted execution environment Keystone. So mitigates some of that concern of trusting a company. I think that's all the time I had. Right. Okay, cool. Thanks.